Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Rodney Hood, a former chairman and current board member of the NCUA. So we got a credit union regulator on the podcast. We don't get a lot of actual regulators. I really enjoyed this conversation with Rodney. We went through why they opened up an Office of Innovation and Access and why he thinks of those two things as importantly combined and put them together in the office. I thought that was a really fascinating. We also talked about his Shark Tank program at the regulator. So that's not something I thought would go together. So a fascinating conversation about how he thinks about innovation, how innovation can be helpful to consumers, the role of fintechs, the role of AI in helping broaden both innovation in the space to help the consumers, but also to broaden access and help with financial literacy. I think all really important topics. Rodney was a fascinating guy, and I'm really glad we got to have this conversation. So please enjoy my conversation with Rodney Hood. Rodney, thanks so much for taking the time and joining us on the podcast today. I really appreciate it.
I'm delighted to be with you, Jeff, and thanks for the kind invitation.
Yeah, it's not often I get to talk to people who actually work in the regulatory environment on the podcast, so I'm really fascinated to do this.
Well, I am too, and any chance to get an opportunity to demystify the regulatory process, I'm all for.
Well, I love demystify, but when we first talked, you used the phrase Shark Tank. And I got to start with that because of all the phrases I thought I would hear coming from somebody working in a federal government agency. We have a Shark Tank. It's not one. So talk to me a little bit about what you're doing in that vein. And we'll dive off from there. But that phrase just stuck in my mind from our time. I wrote it down, start with this because it's fun and interesting.
Well, Jeff, it is fun to start with that. Shark Tank is something, and I'm doing the air quotes because I realize that Shark Tank has been trademarked. So I have to do Shark Tank Light whenever I'm talking about
Dragon's Den. Isn't the original one in the UK was the Dragon's Den, right? So you can
Exactly. But Jeff, I think what you're hearing from me, and anytime we speak, it's Fintech is integral to the ongoing success of the credit union system. I recognize that we as government regulators, no one ever expects us to lead when it comes to innovation. They often expect us to follow. So we can be really quick followers and maybe even early adapters. But when it comes to really getting that game-changing product out there that really is going to help our communities grow, thrive, and prosper, it is through those social entrepreneurs who are typically working in a Shark Tank or a competitive environment. So I, as many people know, have wanted to really look at ways to broaden financial inclusion throughout our society. I often say, Jeff, that financial inclusion, it's the civil rights issue of our generation, and we're not hearing a lot of tools and products come every day that's going to help that 40% of American households who frankly can't obtain $400 in an emergency. So one of the things that I worked on, there's a lot of venture capital funding that's now going into fintechs that are serving credit unions. There's almost about $900 million that I'm aware of that's supporting credit unions and fintechs. So I banded this idea around with them. Why don't you all put together a competition where social entrepreneurs, fintechs that are focusing on financial inclusion can get together and do a Shark Tank Light event where we get people together, we judge, we give them our opinions, and it was a wonderful way to really sort of get a lot of interest and excitement. And now with my newly launched innovation office, I have tasked our new head of that office, Charles Weiss, with working with the broader VC community, fintechs, and credit unions to see if we can even do more of the financial inclusion events. And then also, I thought we would do them thematically, Jeff. So springboarding from financial inclusion and maybe doing something around faster payments. How do we really sort of make sure that we're getting real-time payments for these small businesses who really don't have time to wait for the float and things of that nature, but we want them paid instantaneously. And then maybe we'll pivot and do more around digital identity. So I tend to like to think Shark Tank-like events bring people out that I would never be able to find. So that's why I'm so thrilled, and more to come on that.
So let me ask, I'm really curious how you think of the role of the regulator in this space, because so often I think two things as someone who's been through the startup. One, I got a lot of advice like just stay off the radar and don't have them know who you are until you have to, which I thought was bad advice. And I also think it feels like the regulator is there to tell you what you can't do, not figure out what you can. So tell me how you think about the way a fintech or a technology company should be engaging with the regulator, what the regulator's role is as these kind of new technologies are coming out.
Let me sort of back up before I go into that, Jeff. NCUA, National Credit Union Administration, we are quote unquote, the FDIC for the credit union system in the sense that we insure deposits for our members. So just as the FDIC insures accounts up to $250,000 per account, we do the same at the National Credit Union Administration. But unlike the FDIC, I'm not just an insurer, I am a policymaker. That means that we also regulate some 4,800 credit unions. That means that they are serving now 135 million members of those institutions. So that's roughly a third of the American public has a credit union account. And Jeff, assets to date approximate $2.2 trillion. So credit unions not only have those large assets, but they have large loan volume. 1.5 trillion is outstanding in loans. So I, as a regulator, I'm a safety and soundness regulator. So are the members of my board. We're making sure that we are paving the way for credit unions to have the policies that can keep them safe and sound, while also adhering to the fidelity of consumer protection, consumer compliance. So yes, there is a regulatory hat that I'm looking at: interest rate risk, liquidity risk, all the other things that you would expect a regulatory body to do. But because of my having worked for 20 plus years in financial services, I've been blessed to work with a number of Wall Street firms where I've done affordable housing, economic development, commercial lending. I see the role that these lending activities can play with credit unions. And the thing, Jeff, I'm such a proponent of fintech because not everyone now is going into the traditional brick and mortar branches of yesteryear to conduct business. So when I talk about embracing technology and fintech, it's not doing it because it's the luxury. I think pre-COVID, we all probably thought of fintech and products as just, isn't that a cute little toy? No, it has gone immediately now from a cute little toy to a strategic imperative. So when you hear me as the former chairman of our agency and now board member of our agency, when you hear me being so arduous in my pursuit of fintech, it's not chasing the toy, but it is making sure that credit unions have the tools to remain vibrant and sustainable in today's environment. 135 million members, 6 million of those came during the pandemic. And a lot of those folks, you all who joined us, they were Generation Z, they were millennials, they were folks that really are coming from a digital native environment as opposed to the analog environment of my generation. So I will not have an industry to regulate if credit unions are not using these types of tools. So that is why it is more of a business imperative, and I would not be setting them up to thrive as 21st century institutions if I am not giving them the regulatory empowerment and flexibility to embrace these new emerging technologies. So, Jeff, I launched a series called a Fintech Discussion Series where I meet with fintechs like yours. And what happens is when a credit union enters into a relationship with a fintech, that means that when we are doing that natural examination, we can ask about third-party providers. We looking at the vendors with whom they're partnering. And frankly, examiners can be a little risk averse, not saying that they don't like to see change and innovation, but if credit union examiners don't understand the nature of that fintech or the nature of what's going on, they will assume the worst and want to shut it down. So I recognize that with 1,200 credit union service organizations, look at those as organizations that support credit unions in their day-to-day activities. If 400 of those 1,200 are fintechs, I don't want there to be a disconnect between my rhetoric and the exam experience. So every week we bring in a fintech. In fact, your company has presented. We have them come in. We ask questions. I immediately tell the fintechs, this is not your elevator pitch. This is not Shark Tank. This is just getting your examiners of your partners comfortable with your compliance and things of that nature. So I am looking at it as forward thinking. We also, Jeff, are providing guidance. I mean, meaning the credit unions themselves, they now know that we are encouraging them to engage in fintech partnerships because we told them, look at these as you would with any other third party. We also gave guidance letters around the use of digital assets and distributed ledger technology. These are all tools that today's generation wants to have happen. If they don't see them, they're going to walk. And again, if we don't embrace it, then will I even have an industry to regulate a few years from now? So sorry for such a long-winded response, but I want to see why the lens under which I am looking at technology and the wonderful role it plays.
I love that answer because I do think I've seen that many agencies the disconnect between the offices of innovation and then what happens when an examiner walks into a bank or a credit union in the field and go, yeah, we just talked to the Office of Innovation. They were all on board. No. Whoa. That disconnect can be really jarring for the financial institutions on the other end of it. And so it's great to hear how you're connecting those dots.
Jeff, you're right. It can be jarring. And I don't know if any of the listeners of today's podcast have ever watched this movie, The Exorcist, with Linda Blair many years ago. And it's when she has that head spinning exercise. And you have the head spinning. You'll have credit union boards and CEOs and chief lending officers all want to embrace the technology. And then they hear from me one day, but then there's that disconnect. So one of the things that I'm doing is my new head of innovation is going to be doing a road show where he's going to be traveling around the country to do listening sessions. We're going to have him at some of the venture capital events. I also am working with him. You mentioned the other offices of innovation. NCUA is really fortunate, Jeff, in that we were among the last of the financial regulatory agencies to create the new office. So the FDIC had one, the OCC had one, the Office of the Comptroller of Currency, that's what that is, Federal Reserve, Commodities Future Trading Commission, almost every agency had one with the exception of ours. And I want our viewers to know I was not creating the office because I wanted us to have our own just to keep up. I wanted to have our own because I saw from some of the things that they were doing, I knew what we could do differently. Sometimes the agencies within government, they have an Office of Innovation, they're that agency's best kept secret. I don't want our Office of Innovation to be a secret. So that's why he's going to be doing listening tours, op-eds, helping convene fintechs. Jeff, I'm also wanting him to look at some tech sprints. How do we find opportunities to have a product, a problem, put some fintechs in a room, and maybe a week later they tell us what those solutions are. Another piece is sandboxing. I just recently presented to a group of building societies in the UK. Their version of credit unions is what they call building societies there. So I presented to the the Financial Conduct Authority. That's their prudential regulator. And we talked about sandboxing. So, Jeff, your earlier question, you talked about the regulatory piece. So one of the things that I tell folks is let's do some regulatory sandboxes where we have that fintech meet with us at NCUA. Let us determine what makes sense from a regulatory and compliance standpoint to work out the impediments. The last thing you want to have happen is for that social entrepreneur to go live, and then we find out that they are not adhering to fair lending or fair housing protocols, and then you have that bad experience. The investors are upset because that fintech has gotten a fine or a warning, but let's do the regulatory sandboxing. I think we've seen some wonderful models of that from our peers in London and also the folks in Singapore. So that's when you were saying earlier that people were saying, stay, keep your head down. No, let that regulator know so they can work with you. And again, we are not their prudential regulator, but again, at the end of the day, I want 135 million members of our credit unions that we oversee to have a seamless, frictionless experience when they're dealing with that credit union. And fintechs can do that. So no, let's work together with them in partnership for the greater good.
Yeah, I will just plug that as well, because I did say we got a lot of advice that was to keep off the radar. And, we did the opposite. This will amuse you. But we were, when we started doing our first AI, we said, well, how do you think about fair lending? We said, well, we should call the CFPB. And being new on the job, kind of your examiner point, like we walked into the enforcement office and the local, that was probably not the best place to raise your hand and go, hey, we're doing something here. We'd like to understand the regulatory environment. Maybe the Office of Innovation was a better first point for us.
A better thing, because then there's a shared idea and things of that nature. So, Jeff, again, I want our folks to know, reach out to your regulator, get to know them. Also, I'm going to be asking my innovation head to do roundtables, even with his peers. A credit union solution around using data to make more informed decisions is something that I think the banks would want. Using artificial intelligence and machine learning to help with suspicious activity reports and Bank Secrecy Act compliance, those are things. So I want to be looking for shared solutions that we can bring all of our offices of innovation together. I also would like for them to look at doing some office hours. So again, it took me 2.5 years to find our head of innovation because I had plenty of people who wanted to take that role when I was offering it to have more of a compliance approach, and their approach that was just say no. And I wanted someone who can just say yes and get there without any degradation in asset quality, compliance protocols, and anything of that nature. So I hope that in the days ahead that you will get to meet our new head of innovation.
I want to dive into the office you set up, because it's not just the Office of Innovation. If I understand right, you made it the Office of Innovation and Access, which is an interesting pair of things to put together. So talk to me a little bit about how you see innovation and access kind of coming together and being kind of two sides of the same coin. Because it's not, most of the offices of innovation are not innovation and access. They're just offices of innovation.
You're absolutely right. And Jeff, I knew that that was going to be something that I was going to be running counter to what other agencies were doing. My background, just a little bit to be quick, I was a missionary in Africa. I lived in Zambia and Zimbabwe. I thought I was going to become an Episcopal priest, and I was just going to do a lot around saving lives and things of that nature. But unlike the movies, I never was jostled from my bed at 4 a.m. with lightning and thunder and then just waking up and actually like, well, gee, I guess I'm not wanted in this field. So I went into finance. So I've been in banking, financial services for the better part of 25 years now, but working in affordable housing, economic development, urban renewal. So what my priest later said was, first of all, no one has the wake up call at 4 a.m. to bolts of thunder and lightning. So where did you get that from other than movies? And then also he wanted me to know that I needn't wear the clerical collar to really make a difference in people's lives. And I have long been a champion for serving the underserved. So where the scriptures tell us to serve the least amongst us and to serve underserved, marginalized communities, I get to do that when I was the CRA officer for a Wall Street bank or when I was working in corporate responsibility for another Wall Street entity. So Jeff, along the way, I have come to take on financial inclusion as the civil rights issue of my generation. I would say collectively our generation. Credit scores determine where you get to live, which ultimately determines where you get to educate your children. Credit scores determine where one gets to even get the car that they want to drive to and from work. And credit scores also, lamentably, in some instances, determine where you get to work, because without a good credit score, you may not even be able to get the job of choice. So credit scores so much really dictate one's life journey. So I have made financial inclusion a major pivoting point for me. And since I do oversee a banking or regulatory agency for credit unions, I have made sure that we are helping make small dollar loans available. I referenced a data point early on with our conversation. 40% of American households can obtain $400 in an emergency. Overlay that with a community of color, 60%. So from the most recent FDIC unbanked, underbanked research, 60% of minority households could not obtain $400 in the event of an emergency. And then if you keep going to overlay that with a community with disability, it's 80%. So yes, 80% of communities of color with a disabled individual in that household cannot obtain $400. So I have taken this issue of excess. How do you make housing accessible, loans accessible, credit accessible? So what we are doing is, following the George Floyd murder, I penned an op-ed in the Wall Street Journal where I talked about banks and credit unions coming together to spur healing through financial inclusion, through financial education. I know you and I are recording today's podcast in April, with it being National Fair Lending Month and also National Financial Literacy Month. So it's Fair Housing Month and Financial Literacy Month. So we're celebrating those two things. So I wrote an op-ed where I called for these individuals and credit unions and banks to work together. But you know what, Jeff? I mean, yes, the op-ed was nice, but we needed something more demonstrable than that. So that is where I worked with my senior leaders here, and I created the Access Initiative. And that stands for Advancing Communities Through Credit, Education, Stability, and Support. That means that we're going to have a dedicated person who's helping credit unions learn more about financial education, how to distribute that to their members. How do we bring on financial coaching? How do we find not-for-profit foundations who may want to do match savings to help that person who's never had an account before begin to see the benefits of saving? So we created the Access Initiative. Again, it was, someone once said that where compassion meets empathy, that's when you really get to have demonstrable action. So I was really delighted to bring forth the compassion and the empathy with a demonstrable result through Access. And when I started seeing fintechs and other companies that were working around this space, a lot of the social entrepreneurs, Jeff, wanted to cure some of these ills as well. And if there's anything I think that the George Floyd tragedy has done, is catalyzed a lot of folks who are wanting to invest in underserved, under-resourced, marginalized communities. And nowhere was that more apparent than through the fintech community. So I wanted to marry innovation with access because it's intentionality. It is saying we're not just innovating because it's luxurious and cool and glamorous and sexy, which I know that's what you enjoy about it because you were probably one of those early pioneers in this glamorous, sexy space. But I am looking at innovation to spur greater access. So that's why we do have the Office of Innovation and Access matched together. Now, again, there may be opportunities where they're looking at things that don't fit under the access umbrella.
Yeah.
At the end of the day, I think when we have that intentionality, people are knowing as to what I want the byproduct to be.
Yeah, to be honest, that's what drove us into the space initially when we said, what's the problem in the world that we saw that caused us to start the company was really there are a lot of people who deserve credit who can't get it or charge too much for it, mostly because we as an industry aren't good at understanding that they're not as big a credit risk as maybe their credit score indicates. And that's costing people either access to opportunity or it's increasing the price of that access. In terms of the cost of credit, in a society where credit is really required to access many of the opportunities that we want to make available, whether that's higher education or housing or a car to get to a job, that credit is really critical.
Or even the job itself. Even the job itself. We require that in some instances. And if I may, I take a very broad approach when I look at diversity and underserved. So I'm talking, of course, low to moderate income, but I'm also talking about those rural communities, those tribal communities. I'm talking about disabled and differently able populations, and also justice involved individuals as well. Folks who may have gone through the criminal justice system, paid their debt to society, but unfortunately, like Hester Prynne from the Scarlet Letter, they're still wearing that Scarlet Letter. So finding ways to bring them into the financial mainstream, finding ways to get them financial inclusion. So those are all of the folks that we are wanting to work with this new access initiative. So I'm really proud of it. And in fact, I do have a person that's been hired for that role as well. And again, the Office of Innovation and Access, they are working seamlessly. And again, I'm really happy about being able to create that opportunity.
Let me ask you one other thing. What are the things you're most excited about in that access space? We talked about the lack of availability of small dollar loans. A lot of people who need that couple $100 in an emergency end up turning to payday lending. I know there's people working on it. Are there things you see, or particularly for the banks, credit unions that are listening, like opportunities, technology, say, hey, this is a thing that can really help increase access or assist in your ability to work with communities that might be less traditionally advantaged? Like, what are you seeing out there that makes you excited about the future?
I'm really excited, you all, when I travel around the 50 states of our country, when I'm meeting with credit unions and other state regulators, and when they talk about how now many of the states are requiring financial literacy and financial education to graduate. I am really excited about that because there are a number of individuals, you all, where people are not teaching their parents children about financial literacy and financial education. I don't want there to be these opportunities where these children and high school students, they are going off to college and they are signing up for a free credit card because they get a free T-shirt. And trust me, that $5 T-shirt is not worth being saddled with debt for most of your professional career. So I'm really excited that financial literacy and financial capability are really, really being taught in some of the different high schools. And again, I understand that there are a lot of districts around the country that are really making that a requirement. And I think that's so important. I'm also excited that I'm starting to see an emergence in credit unions of high school credit unions. That means that credit unions are taking some of their resources and putting a branch in a high school and letting the high school. In fact, just a few weeks ago, I was in Lincoln, Nebraska, where I was with a group of 10-year-olds who were taking their allowances and putting it in the credit union, and they were doing all the appropriate work around knowing your customer and Bank Secrecy Act. And again, the 10-year-olds had a minor grasp of what it takes to run an institution. So I'm excited and very bullish about the growth of financial literacy and education in high schools, the fact that our credit unions are stepping up to the plate and making it possible for people as early as 10 years of age to have access to credit unions that they are owning and operating themselves. I'm also very excited about just the fact that we are seeing a number of de novo credit unions that are coming. So that means that these are new chartered entities who are saying, hey, we see some momentum. We love the excitement. And a lot of them are wanting to be digitally native. So again, many of them may never have a brick and mortar presence of yesteryear, which is what my generation is accustomed to. So the fact that there's excitement about credit unions, and I'll tell you what the excitement is, Jeff. I probably should have talked about this at the onset. Credit unions are owned by the members. So that means that those 135 million people that I referenced as having a credit union account, that means that they have all invested $5 a minimum to join the credit union, which gives them a shared governance of that credit union. That means that one share, one vote. So whether you have $5 in your credit union or up to the insured maximum of 250, you all get one vote when it comes to looking at governance and your board members. But also credit unions, they grew out of necessity following the Depression when the hardworking men and women from the automobile plants and manufacturing entities, they could not get traditional Main Street financing just because they were considered the lower income of their generation. So what did they do? They galvanized, they reached into their pockets and took whatever change they had and they started lending it to each other. So out of that grew America's system today of credit unions, or the system of cooperative credit. What I'm trying to picture here for you all is that it all grew out of people helping people. So now, nearly a century later, that ethos still is embodied every day. So when I mentioned those 6 million people joined over the pandemic, it was Generation Z, it was millennials, because credit unions are purpose, mission-driven institutions. If there's anything that this younger generation cares about, it is the ability to make a difference. They want to know, is their institution investing in underserved, marginalized, and credit unions do that not because of some of the government regulations that in many instances do require banks to do that. In fact, I had a role. I was a Community Reinvestment Act officer, but unions are not governed by that. So the fact is that I'm seeing excitement around this emergence now of people wanting to create their own credit unions. There was an African-American sorority that just created a credit union. I was there to meet with them. There was an Episcopal church in New York that has just created a new credit union. There was a tribal group in Montana. So we are seeing, even in the midst of some of the headwinds that I know that all the viewers are aware of in financial services, even in the midst of those, there is a port in the storm where folks are wanting to see the value of owning mission-based, purpose-driven institutions. And that's what makes me excited and bullish about the future, Jeff.
I love it. And I love I love all of that. And people helping people is that was one of the fascinating things for someone coming from the technology. Not that the technology industry is not interested in helping people, but I think there's that perspective of bankers that comes from Wolf of Wall Street and whatever. Maybe your run-ins with an investment banker, and then when you come to the credit union community, or equally, I think the community banking community, you really get to people that feel a lot more like It's a Wonderful Life, that are there trying to help their community and do the right thing. And it's always great to see. And I love your statements on financial literacy, because I felt like it's, for many years, like it's criminal that you can let students graduate from high school and have no base understanding of even simple economic concepts like APRs and interest rates and what compound or simple interest and what a credit card. I run it up, and then what does it really mean and how much is it going to cost? Like it's terrible that we're relying exclusively on families to pass along that knowledge and not providing it to our children, because it's crucial knowledge to be able to operate in the modern economy.
And Jeff, it really is. And if I can go a step further, and many people think it's the communities of color, it's those low to moderate incomes, communities where the families are not sitting around the table and talking to their children about these topics. I beg to differ with that. I want folks to know I have been fortunate to visit some of the credit unions at the Ivy Leagues. We have Ivy League credit unions. We have colleges in California with credit unions. And I want you to know that the students that are at those prestigious schools also have never had a parent sit down with them. So this is a dad who may be CEO of a Wall Street firm, or whose mom may be a nuclear physicist. But the point is, I want folks to realize that it's not just something for low to moderate income or minority communities. In fact, Jeff, I had a CEO, and this is I'm not going to name the Wall Street firm, but this father was just borderline apoplectic that he was at some event with his son, and the son was using the debit card and the credit card. He said, well, son, it's the same. He said to the father, well, it's the same thing, debit and credit cards. It has the same numbers. It has the same insignia. He goes, no, those are totally different. So this is the offspring of someone who, let's just say, kind of knows a thing or two about credit, but for some reason, you don't teach these concepts through osmosis to your offspring. So I want folks to know that no matter what your income level is or educational attainment, these are all things that people can learn from, because I sometimes think people just think it's just one group of people. No, I've seen it come full throttle throughout all levels of society. It's just something that we just need to spend time on. And again, what a better time than now with this being National Financial Literacy Month to at least talk about it, Jeff.
Right. So it is amazing that, and not just the kids of the financially, but the number of well-educated professionals I run across that just don't, they find out I'm in the finance space and they have just basic questions, and you go,
I know.
How do you get by in life without knowing these things? But we don't. It's not like you not just a high school degree. You can get through college, grad school, and never have taken a single course on economics or personal finance. And it's mind-boggling.
What it means to look at the credit card. And again, that $5 T-shirt that they're giving you because you're taking out a credit card. And I do have to tell you, I do have a little pet peeve. I have a pet peeve whenever I fly, and you're the first group that I've ever mentioned this to, and I'm pretty mild-mannered, as I hope your audience can tell. But if there's one thing that gives me Othello's rage from Desdemona, and that is when I'm on a flight and we are about to land and you're looking at your messages and they start with the credit card solicitations. The flight attendants are walking around giving everyone who raises their hand that wants
1,000 miles, sign up today.
And I'm like, no, you're setting them up for this unexpected, unrealistic expectation that all it takes is to get a credit card, but you're not coupling it with any financial literacy, financial education. And the reason I get borderline apoplectic when I see that, it's almost not showing any respect for what we do in financial services, whether we are regulators or whether we're working at banks or credit unions. It just makes, I don't want to say a mockery out of what we do in terms of extending credit. And I just think it just cheapens the experience. So I've got it off my chest that I just wish that they would not do that, because it just sends the wrong message that financial service is just about handing out a flyer and then you go home and magically you're getting this
free stuff of some sort that it all gets paid for, right? I mean, that's one of the things every time my kids are in a casino or whatever, and I'm going, I go, people win money at these games, Dad. I go, well, you see this really fancy building you're walking around in? It didn't come because most people make money playing the games. It came because people lose money playing the games.
I know, exactly. Well, Jeff, but no, you're absolutely right. I hear you. So that's all the more reason around financial literacy, education, coaching, and podcasts like this. And again, there are some fintechs that are creating training modules that can be done via the iPhone or the Android. I'm not making an endorsement, iPhone or Android, but then you can access the tools and things of that nature. So I'm really glad that the fintech community is embracing some of these around education. It needs to be ongoing. It's not like turning it on and off like a faucet. It needs to be ongoing and really inculcated throughout all areas, I think, of society.
Absolutely. A nice way to end the conversation in Financial Literacy Month to talk a little bit about the importance of financial. Maybe we both ranted a little bit on that one, but it's an important topic. Right, I got 3 questions I ask everybody at the end of this podcast, so I'm gonna give them to you now.
Okay.
First, what's the best career advice you've ever gotten?
The best career advice I've ever received is recognizing that not every promotion has to be a promotion. Sometimes you can have a lateral move. So don't think of your career as being linear. We want to go from associate to managing director in 2 years. Sometimes you may need to do a few lateral moves to build out your core competencies, to also learn about a different team, looking at different ways to problem solve. And I would say in my early days, I looked at a lot of my career progression around it being so linear. And I recognized that as I got sort of mid-level, that sometimes you can do that lateral move that's going to expose you to a totally different product or totally different way of thinking, and that's really helpful. So everyone, look at some lateral moves. Not everything is linear, and also volunteer for projects as well that can also help you build out a skill set that you may be lacking.
I love it. Volunteer for projects and look for the lateral opportunities. I always love that. Maybe it's the overly quoted, but the Steve Jobs commencement where he said you can only understand a career looking back. Like, so you got to kind of, if you plot it out too far ahead, it's never going to play out that way. And you got to be open to the interesting moves that are available, the opportunities that are there, and not just the one they say, well, I'm supposed to be vice president next. I gotta
No, exactly. And that creates disappointing opportunities. And almost for every role that I've had, it's almost found me. I don't think that I've ever really sought a role outside of when you're like in college, when you have the career fair and you're sort of working with the firms that come to the campus. And for me, it was at the University of North Carolina there at Chapel Hill. But after that, people start finding you, and your network sort of creates opportunities. So I tell folks, just be receptive to whatever comes your way. And I've also been blessed, even with my work in public service. As you know, I've served now in 2 different presidential administrations, and one does not just call the president and say, hey, pick me. It's just any number of variables. No one to this date has ever told me how each time I've been selected, Jeff, but I was amenable to the phone call. I tell folks today, I said, you never know who's going to call, and sometimes part of life is just showing up, but showing up, being prepared, I think is a big help.
Love it. My second question, what's the best piece of advice you've ever gotten about the banking sector, or this is a kind of interesting one to ask you, but the consumer banking space?
The best piece of advice I've gotten about the consumer banking space is that bricks and mortar may be disappearing. And we've been talking about that now for about the past 10, 15 years. And the advice that I've been given is, again, to embrace the technology, to embrace some of the handheld devices, because many people can now use those devices to get a loan, to make a payment. And the big advice now is, if you're going to really replace bricks and mortar, what are you going to do to still be tethered to the customer, in my case, the credit union member? So as credit unions are embracing digital platforms, what are they doing to still define their value prop? What are they doing to really show that they are building a relationship as opposed to the transactional aspects associated with a member? So I think the best advice is recognizing that bricks and mortar may be a thing of the past, but what do we do to still build the relationship and have that sticky feeling? And I think that's the one advice, y'all. And I learned about that 20 years ago, and we've been hearing about it, but now I think that really is manifesting itself. So not saying that bricks and mortars will be completely gone, but I think that the best advice is start thinking about how do you build a culture and an identity and a brand, recognizing that you may not see those folks face to face as often as we used to.
Yeah, that's it. Right. I don't think they're necessarily disappearing, but people don't want to have to come into the branch to do things they don't need to come into the branch to do. And meaning they want to actually talk to the person, not you're forcing them to do it to deposit a check or whatever it might be.
Exactly. And when we do have them come in now, Jeff, so that also means that if you're going to be able to use the video tellers and the automatic teller machines, for a lot of those routine businesses, that means that we in financial services, whether it be banks or credit unions, that means that now that person that is in the branch for those face-to-face encounters, we're going to probably need to up our training there, because it means that they're going to be dealing with slightly more, I wouldn't say a difficult situation, but someone that may need to have that extra time, whether it's getting something notarized or maybe looking at a HELOC or some of the other things. So it does mean that we're going to need to probably invest and make sure that we have folks who are more equipped with troubleshooting than perhaps in the days of yore when you had that branch personnel.
Yeah, the more transactional. Love it. So my last question, Rodney, what's one bold prediction for the future? I feel like we've been in the bold prediction space for quite a bit this conversation, but one bold prediction for the future. Someone we can bring you back on and have a discussion about whether you were right or wrong.
You know what? I would say that in the future, I'm thinking that digital currency, digital assets are going to be far more commonplace than they are to date. I know we talk a lot about the hundreds of different type of digital assets that are out there, but I think as the Federal Reserve and others look at a digital stablecoin, I think that as I travel in a few weeks to meet with folks in London to talk about digital currency, I think that we're going to start seeing probably in the next few years, I can't say when, but I think it's going to be common. I know you have youngsters at home. You're going to probably be able to pay your babysitter in digital currency. You're going to be able to just sort of use your phone to do that. I'm thinking that digital currency is probably going to be far more mainstream. And I predict that cash will probably not be nearly as prevalent as it once was. I think we saw a bit of that during the pandemic when folks were, one, not really going into the office or their local coffee shop, and those that were open were basically discouraging cash. So I think we're going to probably see less cash and more reliance on digital assets.
I'm looking forward to it. I've made and lost money, not a lot. I don't play a lot in the digital asset space, but I've been playing with it for a number of years. And there's certainly a lot of interesting stuff happening there and a lot of interesting opportunities opened up by that. So it'll be really interesting to see how that all plays out. Rodney, thank you so much for making the time to join us today. This was a fascinating conversation. I really appreciate your making the time.
Thank you for inviting me again, Jeff. I hope that you and your listeners were able to glean some insight about what we're doing at NCUA as we regulate and ensure the safety and soundness of almost 5,000 credit unions. So I've enjoyed it, and I do hope I'll get to see you in California soon.
Absolutely. Looking forward to out in DC when I'm out that way. Thank you, Rodney.
Sounds great.